Hi, welcome to the Price Action Analyst. This is SGEN, Seattle Genetics. Had a request to look at this. This is the history back to 2001. These are weekly bars. Kind of had the same breakout, consolidation, breakout, consolidation. So now you've had a more substantial breakout here. Prices come and tried to close the gap. That was an ideal long. So it's now in its second leg up. This is interesting here. Sorry, I'm just digressing a bit from the current price action, but I'm always I always try to stay away from trading breakouts like this one here. There's a prior high here. Here's a breakout, because the high probability event is that price cycles back on you. The ideal trade for me is in the uptrend. I'm trying to hit the retrace. I'm trying to hit these and this up rather than the breakout. Because most times you hit the breakout, price cycles down. And it's interesting, when you look at a chart, I think the human eye sees that. They're always looking for price to go up and they expect price to go up. But price on the breakout, price generally will cycle back. So, there's a lot of people online that are hitting breakouts, and price, that to me, that's the low probability event. I'd much rather wait for an uptrend and then hit the retest of the obvious era. So when price comes into this gap and starts to leave a series of wicks, that's where I'm looking to get long. But here's an example of, I wait to see what the breakout looks like, because if the breakout is going to continue on, it looks like this. So, and you're better off looking at these with bars. So when price breaks out and leaves air, that's a breakout. And there's no way to know, if you get into that trade, it's probably going to cycle back. So there's no way to know whether it's going to cycle back or it's going to be a substantial breakout. So it's better to just stand aside, and if it's going to break out, let it. And when it cycles back, hit the long here. And so you've got a couple of things going on. You've got this long-term trend line. So a retest of that. You've got air here and here. So the trend line, air, and then you've got a retest of this previous high. And again, it pushes past the previous high on air, and then the retest or the reverse anchor there. So you've got three things: the retest of the high, retest of the trend line, and retrace of air. So that, you could just have a long order to get an order to get long at, say, 79 there, and just hit it. Even if it goes against you, the premise is still up. So that isn't, when I say wait for the breakout to see if it's a breakout and then hit the retrace, that's textbook right there. What else did I notice about that? So again, uptrend, consolidation. I'd be looking at this gap here. This would be where I would expect strength. And then as it posts down here and starts to leave wicks, at this first wick here poking outside of the Bollinger Band, anywhere within that anywhere within that wick, like after it prints in, is a long trade to the upside. And so you can, you can play with those. These are daily bars. You can buy call options in here and just sit it out. If you're going to buy a call option there, buy it. If price is here at 95, let's say it's 95.38, buy the 95 call option so that when it moves, the intrinsic value is increasing. So there's a substantial breakout here, second leg up, and then we've had consolidation and price is broken out again. So following on from what I just said, the low probability event is for price to just continue higher. It is possible, but even if price continues higher, it still inevitably will cycle back. So, this stuff here is rare. That's when I trade, I don't expect that to happen. So, for the person that sent me this request, I'm assuming that you're already holding the stock. If you're already holding the stock, I would continue to hold the stock. You can afford for price to retrace and go out, and if it just continues to push higher, that's great. If you didn't own the stock and you were looking for place to enter, there's air here, there's a little bit there, very minor there. So I'd really be looking for, buying strengths on the retrace here to get long. But again, if you let's say you really like this stock or the company or whatever, and you're wedded to the fundamentals, and price opens higher on Monday and the first 10-minute bar is a green bar, you can buy it. And it may never push against you again, but again, that's the low probability event. High probability, especially after the push above this high, is that if it pushes up, it leaves a wick and then price retraces to some extent. It's kind of like here. Oh, price is breaking out. Well, this is a better example because this was the previous high and it broke out here. So, it didn't close at the high, but let's say you're intraday and you buy here because price is breaking out. What happens? It immediately cycles back. Tries to break out again, pushes back. So that is higher probability. This is low probability. And this has only happened after people have been faked out like numerous times. That was pretty clean. So again, that was a clean break, but retraced. So you could have hit that long. You would have been better off hitting the long there. So I would just wait. And another way to frame this is, if I'm trading futures, I have to wait. There's no way I'm touching that. Because, again, high probability it does that, and then I'm in the hole hundreds of dollars. So, if it's futures, if it's short-term trading where your account's at risk, I'm waiting for this. And if it doesn't, I'll let it just push against me. So stock, you can afford for price to cycle back, but futures, I wouldn't touch that. So not sure what else to say about that. Again, if you're in that stock already, it's a nice one. That was a good pick. I would hold that. I see nothing but strength there. And again, strength doesn't mean it's not going to cycle back and retest lows. That's the nature of price discovery. Price mostly does that. Breakout, retrace, test the gap, test the air. Here's the air down here. Test, push, test, breakout. This is what price does. But it's funny, when people look at charts, I think you're just natural to just see that. Everyone's looking for price to push up, whereas most of the time price is doing this. So hopefully that's helpful. If you've got any questions, I know I've rambled on a bit, but there's a lot, like I see a lot of information in these charts that that's helpful in terms of, you know, what I'm talking about when I say wait for the retracement. You're waiting for that. If you got any questions though, please feel free to leave them in the comments. Like or subscribe the video, and I'll let you know when I have the Twitter channel up. Thanks for watching.